Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, guys. Let's take a look at the Bitcoin market. On the daily chart, market still squaring around the major top, and if you remember, our major suggestion was about some response retracement down from this area, because market has hit actually the very significant resistance. So this is not just a fib level, it's major 618 resistance, but also its agreement. So we have the XOP extended objective point from this A, B, C bottom pattern, which is 1618 extension. So here we have by the Judd-Napoli term, this is agreement resistance, and at least minor response here. It also was daily overbought. At least minor response here is a pullback by 30%. It's normal, typical price action in such circumstances. Besides, guys, the Bitcoin market currently is very thin, and it has the lack of liquidity, not significant turnover stands on the market. And there is an opinion among the traders that this rally was triggered not by the normal market behavior nor market mechanics, but this was just a directional impact of the holders of the Bitcoin, of the directional manipulating of the price. Because right when the spike here has happened on the next session, this trading volume has dropped significantly. That was direct planning some kind of the DDoS action that was aimed on the changing of the price level of the Bitcoin. As you remember, our major concern was in the durability of this rally, because previously we already saw this kind of action that was happened not quite long ago, right here, but it has shown no durability. Flat action and huge collapse. Here is also it's a question how long this action will hold and whether it will get some continuation. Currently we see kind of this housing of the market right now on intraday charts. So we take a look at the 5-time frame chart, and here we're still watching for retracement to this area. That's our major scenario currently on the daily, 4430, 4580 area. There's two fib levels that stands relatively close to each other. This major destination point if downward action will happen. Currently market stands in a kind of the wedge or triangle pattern. If you will plot the MACD indicator, you will also see this divergence with these tops, and overall price action inside of this area shows some kind of the weakness. So we see the divergence stands at the strong resistance. On the hourly chart we have the wash and rinse of this top. So it's minor action that suggests, and this is also bearish in normal markets, classical markets, the wash and rinse means grabbing of the stops. So market just shows spike, grabs these stops above this area, so showing by in fact fake breakout, and turns down again. And here we see this kind of the price action. So you can see currently market stands inside the range of this retracement, following some kind of the price action inside of it. Currently, guys, we should keep an eye on some trend lines. So one of them is the trend line on the 4-time frame chart of this pennant or triangle pattern. Once it will be broken, it could lead to significant drop here, some acceleration down. And here we should watch for inability of the market to reach back this top. Currently, you see that market can't return it back up here, and tending closer and closer to the trend support, aiming on the possible downward breakout. So currently, guys, in such circumstances, I wouldn't take in any long position by far. Yes, we could get some surprising, unexpected upward breakout. This is possible, but we can't foresee everything on the market. But in the current circumstances, with having this price of action standing in strong resistance, personally, I wouldn't take the long position in this market, and but I would waiting for some meaningful pullback. Maybe we will get this triple to buy pattern or something of that sort on the market. That provides at least something a strong support area that could protect our position. But in the current environment, well, personally, I don't want to go long. Speaking about taking the short position, well, it stands up to you, but among the attractive factors that we could mention here, what's really attractive for the possible taking the short is relative close the invalidation point. So with taking the position somewhere in this area, you could place relatively tight stops somewhere above this area, above these stops. This provides very small potential risk to the trade, but reward in case of the downward breakout will be significant. So this is a kind of the gambling features, but overall risk-reward ratio looks not bad. So, and whether to take the part in this trade, that stands up to you. That's been said, we suggest that for taking the long position, it's better to wait for some support area, some clear pattern that suggests some continuation and provide some protection to your potential position. Currently, in such environment where the market shows some signs of weakness, we think that's not a good idea for taking any long position by far.